Hi everyone, welcome to my YouTube. In this video, we're going to talk about what is a decent rate of return for your investment. And the reason I'm putting this video together is that I've spoken to friends of mine and family members, and I mentioned rate of returns of like 17% and 33%. And people would look at me with glazed eyes and they say, oh, is that a good rate of return? So for that reason, I put this video together to help people to get a good understanding what rate of returns are and what is a good rate of return. So let's begin by demystifying the concept of rate of return. All it is just a measuring way of measuring how fast you're gonna get to your financial goals. And a good way of looking at that is, imagine you're taking your car, you're driving from Atlanta down to Miami, Florida. You can get in one vehicle and decide, hey, I'm going to take it easy. I'm going to browse. I want to do some sightseeing as I go. I'm going to drive 30 miles per hour. Well, you can do that. You eventually get to Miami, but it's going to take a significant amount of time. Or you can just get in that car and drive 70 miles per hour, and you're definitely going to get there in half the time. So you look at your rate of return or your average rate of return, it follows that same concept. It just measures how fast your portfolio is going to get to its goal. Let's use an example. Let's say you've been making investments over a 6-year period, and each year you got different rate of returns. One year you got 7%, another year you got 10%, third year 6%, then 8%, 3%, and 5%. So this is a 6-year time period. All you do is take all those rate of returns, total them out, divide them by 6, and you're going to get what your scorecard would be, which is about 6.5%. That is your average rate of return. And this is telling you how your investment portfolio had performed during that 6-year time period. Now, there's another concept called geometric rate of return. And some people call this also compound annual growth rate. So you may have noticed when you have credit cards, they tell you what your annualized interest rate's going to be as far as what they're charging you, which would be negative rate of return for you as an investor. But it's a good way for you to understand of if you were to get an investment and you were making decisions, what kind of rate of return you want and how fast you want to get to your goals. And all it does is just assume that rate of return is going to be steady over this time period of your time horizon on which you expect to hold or do your investment to get to that goal. Now, let's take a look at some of the other financial arenas, look at different investment vehicles and see what kind of rate of returns they have earned. Now, if you look at the stock market, it's done about 7 to 10%. Real estate, about 6 to 8%. Annuities have done 3 to 5%. And then whole life, you can look at the cash value on that. It accumulates about 2 to 3% cash value annually, and Bitcoin has done a whopping 200 to 300% rate of return. Now, whether you choose to invest in the stock market, real estate, annuities, or even cryptocurrency like Bitcoin, understanding the historical rate of returns can help you make investment decisions and decide what's going to get you to your financial goals sooner. Let's take a closer look at how different rate of returns can impact the future value of your investment. Let's say you had $10,000 and you had a geometric rate of return of 5%. And then over 20 years, that's going to accumulate your portfolio to a value of $26,533. Now that's the power of compounding. Now let's take another example. Let's say you had two individuals, one named Steve, another one named Bill. Both have $10,000 and invested over a 5-year time period. Steve puts his investment in a vehicle that's earning about 5% a year, whereas Bill, he's putting his $10,000 into a vehicle that's earning about 30%. Okay, Steve is going to earn about $12,762 over that 5-year period, while Bill is going to earn almost double, or actually triple what the first guy earned. He's going to make $37,129. So these examples show how choosing investment with higher rates of return can significantly impact your wealth growth over time. Now let's take another example. Let's say that, let's go back to Steve. We're going to be a little more nice to him. And let's say he's a very disciplined guy. And Steve decides to put about $1,500 per month into an investment. And he identified an investment vehicle earning about 10% a year. He's sticking to his game plan for over a 20-year period. Well, what's going to happen is at the end of that 20 years, his portfolio is going to grow to $1,159,537. So by consistently putting money into investment with decent rate of return, you can watch your wealth grow substantially over the years. So congratulations, investors. You've unlocked the secrets of what is a decent rate of return. By choosing investment wisely and understanding historical performance and harnessing the power of compounding, you're on the path to financial success. Just keep learning, keep growing, and watch your investment flourish. But as usual, there's always something to ponder, and I'd like to share something I was thinking about. If you look at BITO on February 26, 2024, you'll notice that this stock was bullish because its closing price was above the 50-day moving average and above the 200-day moving average while sloping upward. If you check out my video link in the description below, you'll see how I identify bullish stocks or even ETFs. I noticed on the stock chart that around $14 was a recent low for BITO. The closing price was $25.80, which is $11.80 above that recent low. If you check your broker's option chain, you can find that there is a put with a strike price of $14 and an expiration date of January 17, 2025 that can be sold for $1.50 per share. An option contract typically represents 100 shares, so this put option can earn $150 for one contract. An investor would need $1,400 of capital in order to sell a single put contract. The great thing is that this option could earn a rate of return of 10.71%. I hope this helped you understand how I identify investment opportunities. But remember that I am just a guy on YouTube sharing with you my personal ideas. Please do your own research or consult an investment advisor, as speculating or investing in the stock market carries risk.
Hey, everyone. I need your support on YouTube. Please subscribe to my channel so I can keep sharing helpful tips.